net, long-term, great thing for the city. Short-term, not going to see anything really happening, probably maybe 1 or 2 deals in the next decade.
Couple questions on tax reform, but this one in particular I think is interesting just because you talked about in the talk, or in your opening remarks rather, about how tax reform could be good for commercial real estate. So Bob, there's been a lot of talk that the new tax reform will be positive for commercial real estate, or for the commercial real estate market rather. How about residential real estate and the tri-state market in general?
Okay, well that's the flip side and the negative of,
Right.
of tax reform is that in any high tax location, tax reform is a bad thing because you lose the deductibility of state and local taxes. That's very, very bad long term for the tri-state area. It's not like anyone living here can move to New Jersey or Connecticut because those are high tax states also. So that's impactful. If you are at the high end of the ordinary income bracket and you don't have depreciation to shelter some of that, you're probably paying 3 or 4% more this year than you did last. Ultimately, that could force some people to move out of the city. It's also bad for home ownership. You know, from a real estate perspective, tax reform is bad for condo sales, great for rentals, because it's going to be more expensive to own a home. And if it's more expensive to own a home, you get more folks who are going to rent than to buy. So that dynamic will play out, and we'll probably see, you know, nationally, home ownership rate is about 63, 64%. You know, I think that over the long term, we'll probably see that go down to below 60, and it hasn't been there since the 1940s. So I think we'll see a decrease in home ownership, but I think it'll be a boost for multifamily across the country, but particularly in the high tax states, multifamily should be helped very significantly by that. But, you know, ultimately, the fact that people may move is a big deal for the tri-state area.
Dovetailing off of that, a question specifically about residential rents in the market. So, Bob, with rents plateauing and in many markets starting to decrease, and the supply of new construction rentals said to increase in the next few years, should landlords and investors be worried about valuations that are linked to actual and pro forma rents?
Well, again, I think a big part of the answer to that is going to be seeing whether the forecasts of population growth in New York keep pace with what they're projected to be. You know, clearly we've had a big supply come on the market. There's a ton of stuff in the pipeline, but absorption is not so bad. I think once we see concession packages starting to go down, you know, one of the biggest challenges that we have when we're underwriting a multifamily building today, that's particularly a newer building, is what's the real net effective rent? You know, we've been sideswiped a couple of times where the owner said, yeah, well, I've been paying commissions and I've given some free rent, you know, but then as we're doing due diligence, we find out they paid for the tenant's gym membership, paid for the tenant's parking, I don't know, paid for the dog grooming, who knows what else they paid for to get the tenant in the space. And that's going to lead to a lot of volatility with regard to the stickiness of these tenants. You know, because a tenant really can't afford to be in that apartment. At the end of the lease, they're going to go across the street, try to make the same deal there. So we have to look at the concession packages to really determine what that absorption is going to be like. And we're coming down. I see we have a few minutes left. You want to maybe
I was going to
open it up, see if there are any questions from the audience?
Questions, anybody? Raise your hand.
Yeah, the question for those in the back who didn't hear it is what do I think about Long Island City, and what about Eastside access, Second Avenue subway, all of those things? Is that tangibly impacting the market? Personally, Long Island City I think is fantastic. I think, you know, back in the 80s, everybody was saying, oh, Long Island City is the next hot thing, and then in the 90s, Long Island City is the next hot thing, and you know, finally Long Island City is the next hot thing. There's a ton of construction out there, but the units are being absorbed. I think it would be great to see a better mix of some retail, because a lot of people who live in Long Island City spend a lot of time in Astoria because the environment from a retail and social perspective, a little more neighborhoody in Astoria. But I think that the retail and social things that people look for in a neighborhood will start to come to Long Island City to meet the demand that exists there. But I am very, very bullish on Long Island City. With regard to Eastside Access and 2nd Avenue Subway, we saw a very, very tangible shift in investor perspective once it became apparent that that was going to be a reality. And that was probably 2 years ago, 2.5 years ago. When did we sell that portfolio on the east side?
But about 3.5 years ago now.
3.5 years, even 3.5 years ago, we had people start underwriting increases in rents east of 3rd Avenue by as much as 20 or 25% because of the new subway. And I think that anytime you change infrastructure in any meaningful way like that, it absolutely has an impact on things. That's why infrastructure is so important in the city. On that wonderful note, thank you all for coming.